This is Market Week Live, March 22nd, 2024. Information and support for traders and investors. Welcome to everybody. Glad to see you here. This is the legal stuff that says everything that we do is for entertainment and educational purposes only. Sole purpose of this website, anything we do oral or written or in videos or any way that we refer to anything relating to our website is to provide information that you can use with your investment advisors. We always encourage you to consult your own trading plan or financial professionals before making trading decisions. Please refer to our full legal information at askSlim.com. Our hosts today, well, three of the four of us are here. Katie couldn't make it for this show, and we'll look for her next time. I, of course, have been in the markets for 50 years, originally trader of the CBOE, actually became a member only about 8 or 9 months after they opened that trading floor. I've been a trader ever since. Matt has been around for a couple of decades, as has Arvi. So we've been around here together and developing the way that we approach the markets together. You can learn about us by going to askSlim.com, about askSlim, and meet the team. And you will then be able to learn, see the interviews that we did and learn a lot more about us and our history. Any information that you need from us regarding membership issues, website issues, you can write the team at askSlim.com. Anything on the content, info, education, or analysis, or first-time specials or upgrades, you can write to Matt at askSlim.com. Please remember to go to our website, look around, sign up if you're brand new for Snapshot Lite. That's right on the front page. You'll get free information on the S&P 500 every single day. Matt does a great job on that. And if you're watching on YouTube, do subscribe to our channel. Click the notification bell to get our videos. And make sure you give us a thumbs up. Like this video on X, follow me at askSlim. And again, any questions about anything we present, you can write to Matt at askSlim.com. For those of you that want to know how to watch the show or how you could participate in the Q&A, all you have to do is become a premium member. That's members 1 through 4, and you will be invited and sent the link to participate and be able to put questions up in the Q&A. Those of you that are free or non-members watching, want to watch, you can do that on YouTube, and right now we are live on YouTube. At askSlim Team channel. So that's how you watch us live on YouTube, in case you are not a member. Coming up in this show, I'm going to give you my opening comments on the markets. We're going to show you how we do trade planning. Each of us are going to share a trade idea with you where we take our total approach to trade planning using the askSlim Sum of the Evidence style of analysis, putting together all of the pieces that we look at. Matt is going to review the askSlim services, and you're going to see the amazing day trader. There's no other service like this anywhere. If you're an active trader in the market, you're going to want to try this out. We'll bring our express round with a Q&A for levels 1 through 4 members and take your questions, and you can be putting questions in there right now. You want to ask about trade planning or chart analysis or your own trading issues, please do put questions up there. Then I'm going to bring you a deep dive into the stock market. I'm going to look at a lot here. This is going to be one of my longer segments that I've done on the stock market because I want to show you about corrections and what those periods look like and what we can expect based on the formations that we see right now. So I'm going to show you 12 different charts on the S&P 500, plus 3 on the VIX, plus looking at the special chart, looking at corrective periods in the market. I think you're going to find that very informative. All right, so for the stock market this week, well, it's continued its upside surge with 18-month mission to explore strange new levels and go where no stock market has ever gone before. And while valuations have been huge and the concentration in the market huge with just a limited number of stocks, those historic high weight stocks being the ones that are controlling the market, it's certain that there will be a correction. And the question is, should you be clinging on to those positions while we go into a correction? Indexes had one of the best weeks of the year. Actually, Monday and Tuesday, the market moved up as Tesla, they have raised prices. They keep raising and cutting prices, and then the markets get crazy because the stock gets sold off and they raise prices to China, and then the stock rallies 6%. That's like what happened on Monday. And then on Tuesday, Google, well, that stock jumps 5% as Apple adopts their Gemini system for their iPhones. Apple is way behind on AI, so they're going to put Google's AI in the iPhones, and investors loved that for Google. So Monday and Tuesday, we had those stocks helping the market to move to the upside. And then on Tuesday also, analysts, they upgraded Home Depot and McDonald's, and that pumped up the Dow, and that also helped the market go higher. You keep getting these different stocks that help lift the markets, and overall, the markets are pretty much ignoring the ones that are bad. Very interesting. Wednesday, we saw the FOMC, and we saw them say and reiterate that there are still 3 rate cuts coming this year, and they talked about slowing the roll-off of the balance sheet, which means that QT is going to slow down, but not quite getting rid of it. Well, the investors love that. They just simply saw all of that as meaning that interest rates are going to come down, and they bought strongly. As the market got that news, the buyers came in, the S&Ps moved up 50 points on the day, and there was just another reason for the market to move up that they found. Thursday, well, Micron was the one that lifted the market overnight. It had much better earnings than anybody was expecting, again, on AI. But there was a battle of the techs because Apple, well, that got crushed. The Department of Justice, they're suing them, antitrust issues. They say there's a monopoly that Apple has. And they, of course, have a big percentage of the iPhone market here in the US. It's about 56%. And about 30% around the world. So the Department of Justice, as they look at companies that are successful, that have shown their creative, Apple changed the world as far as devices go. Well, they want to punish the successful, so they go after them for antitrust. And you get by my tone how I think that's ridiculous. Friday, well, the market here is resting. Not a lot going on, not a lot of news in the background. Federal Express had much better earnings than expected, and that ticked up, but there's just a lot of waffling going back in a tight range right now, as the market, certainly after having this big launch to the upside, is a bit tired. The stock market indexes have continued to show us positive formations and positive momentum, with no indication, as we've said many times in here, that the market was moving into a corrective period. There are corrective periods always, and I'm going to show you how consistent those are a little bit later in the show. And while corrections are normal ebb and flow of the market, the longer that the rising trends exist, the longer that they last, the less time that leaves for correction. Sometimes those brief periods are very, very sharp to the downside, but then, of course, the longer they rally, the shorter time they decline, and that sets up further advances. That is what I'm going to show you, why I think that things haven't really changed from what we said in the beginning of the year as far as the patterns go, but what has changed are the levels. So as markets continue to rise and avoid getting into a corrective period, then they start to set up periods of correction that are just brief. I'll show you that coming up, and why, as I said in the beginning of the year, we thought that the highs for the year would be late in the year, even though we expect a correction into the spring. That has never changed. We're still expecting that, with the bull market continuing out into late 24, or maybe even early 25. So I'm going to show you that as we move forward here in the show. For the week, Well, it was one of the best upside moves for the year, actually, as the stocks gain indexes. The indexes gained 2.5% to the upside, pretty much across the board. Bond market 30s up a point. The 10-year yield's down about 9 basis points. And we had looked for the bond market to make a bottom and begin to move up. We think that is happening now. Gold market, very volatile. It had just an absolutely huge spike. It got as high as 22.25, up about $16 for the week right now. It was much higher. It's $50 off of its highs right now, and we still think there's still higher prices to come. Silver down about 40 cents on the week, so it went the other direction, and that's about $1 off of its highs for the week. So they had pretty good pullbacks in the metals, and that's because the dollar remained firm. So the dollar was stronger because euro and the pound and the yen all got sold, but I think they're all about to make important bottoms. That would mean that the dollar would begin to pull down. That would get the metals to firm up again. So we're just looking at all those correlations. So the dollar up about 0.8% on the week, with the yen just turning very weak again as the Bank of Japan comes off of their negative interest rate policy, but then it was only by 0.1%. And their overall statement did not really make yen traders exuberant, so they sold the yen again. And it might be a long period of time before the Bank of Japan does anything really aggressive. So that's really what affected the gains in the dollar for this week. Oil market not doing much for the week, about unchanged. That is my opening commentary on the market, and I've got lots to show you, and so does the rest of the team as we move forward. This is trade planning with the askSlim team. We're going to take you from our analysis to the trade idea. We essentially look at a very unique combination of trading tools in order to bring you that analysis. I'm going to bring you Alibaba alongside trade with a short-term outlook. So it's a short-term trade. RV is going to look at Airbnb. He's got a long-side trade there. And Matt is going to look at Pepsi alongside trade there, but Matt's taking a little more of an intermediate term outlook when he looks at that. So let's take a look here. I'm going to be the first one to go at the Alibaba chart. So that's not the one I wanted to show you. We're going to go BABA and put up Alibaba. This is a very interesting chart right over here. Because you could see on the left is the weekly cycle analysis, on the right is the daily cycle analysis. And when I created the cycle analysis workshop, which you can take a look at for free, you can get see a little video on that if you go to our front page to the workshops, and you'll get an idea of what that workshop is about. Well, when I did the workshop, I thought it was important to do a module that says how the individual cycles create the chart patterns. And this is really important to look at as we look at the weekly chart first in Alibaba. So you can see in there an inverted head and shoulders that's forming. And what typically happens is that inverted head and shoulders forms with the head at a cycle trough. In other words, where there are two cycles coming down, a minor and a dominant cycle. That's often where the head forms. What happens is the minor cycle here gives you a negatively configured cycle, which you see right over here. Then the next cycle over here gives you a positively configured cycle, as you see right over here. That's just forming. Now, that has a tremendous amount of meaning for us because it says this cycle right over here, which was made a lower low, negatively configured, was affected by the downward force from the dominant cycle. If you look at the dominant cycle over here, that is now creating an upward force, proven by the shape of this cycle, a positive configuration. What that says is that once this little correction is over with, the right shoulder gets formed, and then you move into this rising phase right over here, joining the rising phase from the dominant cycle. And then what happens? you get upward movement right in here that will look something like this as we have drawn in here. And that's why we have these upward targets that we have right there. But it needs to get over the neckline right over here. There's the inverted head and shoulders neckline that completes the pattern. That proves to us that we're in the next rising phase with our upward target, very minimal over here at 80.30, but I really think more like 84.5 to about 88.5. 89 is really where that is, and this is the inverted head and shoulders measured move. Let's look at this on the side by side here, and you could see how that inverted head and shoulders forms here on the daily chart right there. Oops, the computer is a little slow. It just jammed up. Let's just wait a second for this to clear up. What's going on here? We got a little bit too much going on this chart right now. Wow. Okay, so that slowed down. Anyway, you can see the inverted head and shoulders right in there, as it's not going to update for me right now. And what that tells me is that this cycle right over here made the bottom. This cycle over here is just getting into support, and that is likely to get the market to move to the upside. So upside target into these areas over here, over 80, maybe 84.5, seems very reasonable to me. So that is a look at BABA. My computer is now jammed on there, so I'm going to turn this over to Arvi, and he's going to walk you through Airbnb. Arvi, you can take it from me, and I will try to get this computer working.
All right, Slim, thanks so much. Let's go ahead and jump over to my screen, and we will pull up Airbnb, as Slim just said. Okay, so Airbnb has been on obviously just a monstrous run higher. What I want to do is just pull up the weekly chart. So what I like about this, first off, is that these are really clear 24-bar cycles. Keep in mind, this is just the average length of these key cycles, which are measured from low to low. The actual lengths will vary by a little bit versus that average length. So right now, what's interesting here is, yes, we saw, if we go back, you can see we opened right around 140-ish. We rallied, sold off, kept making lower cycle highs, lower cycle lows, and then a change happened off of this higher cycle high and higher cycle low. And then what happened after that? We formed another higher cycle high, higher cycle low. And look what's happening here. We're forming a much higher cycle high and in all likelihood, a also higher cycle low. We have a low that is due here 4.8 to right around 527. So right now, this is acting very well. Overall, we are looking for a bit higher. Then for this to put in a higher low and hold around here from right around 156 to 148 or so is what I would be looking for here. And then for this to turn up and make another new swing high in that next rising phase, which goes out into the summer. So a very positive core pattern here going on the intermediate term in Airbnb. If we shift over to the daily chart, what I want to highlight is, I always look back at every stock I'm looking at and understand, where did we come from? We came from this key low that formed on the weekly, formed here as a higher low basing cycle. And after that, you can see a series of higher cycle highs and higher cycle lows. Bullish action clearly still in place in Airbnb with this rising trend that is also firmly in place. So what are we looking to do? Basically, any small dip here, we are looking for it to hold this zone right here from 164.77 to 161.47. If it loses this low here at 160.16, then this would be a loser. And we're looking for a move up towards this zone here from 172.88 to 175.88. So that is our overall look at Airbnb, and an overall really strong pattern that is still in place on both the weekly and the daily. And I'm going to hand this off to you, Matt.
Excellent. Great work, Arvi and Slim. All right, I'm going to share my screen. We should see Pepsi up in weekly chart. Okay, great. So as Slim mentioned in my segment here, I'm going to review Pepsi. I'm looking at a long side bias within a 4 to 6 week-ish outlook period, so the intermediate time frame. So what we're going to do is we're going to step through how the askSlim methodology can answer those key core trade planning questions that we talk about all the time. Those include, what's my outlook period? What's my directional bias? What are the key levels, projections, and including reevaluation levels that suggest that I need to reevaluate my overall analysis or take some of that trade off or exit it completely. And then once you've done that analysis and you've come to some of the evidence, does it show you that you have a clear and tradable edge? Once you have your edge, then you want to be able to determine what your signals are going to be, so that that trade setup is a go, and you have no hesitation or reservation. Your money management rules are in place, and you execute. Okay, so let's look at Pepsi here. What I'm looking at here is I'm focused on this current cycle that we have, and in this current cycle, we have a nice rising phase that has started. And this rising phase is really important because we're only in the third week of this rising phase, and some important levels have been taken out, and therefore there's been some repair that's happened. And you'll see this more clearly on the daily chart. So we're in this new rising phase. We've pushed through that 78.6 here, the 78.6 fib, which is a key number for us in terms of this rising phase, suggesting that there is a warning of this cycle, this new cycle, shifting to a bullish or positive cycle structure here. And since we are in this early rising phase, that should give us a good amount of time for Pepsi to make another move on the upside. Now I'm going to drill down here into the daily chart as well to see if it's supporting the overall bullish positive thesis. And as we can see here, I'm again looking at this new cycle that started. Although it started with a negatively configured cycle, it quickly has gained traction on the upside and repaired that technical damage that was done, converting this negative cycle structure into now warning of a positive cycle structure. Now we have a little bit more room on the upside. It needs to go to really break out above that prior cycle peak, which would confirm that we have a positive cycle structure, and that this prior low here that we saw on the weekly is very important, likely setting into motion a multi-month move to the upside. So in terms of, again, the look on the daily that's supporting the overall bullish or positive thesis, we have that repair that has been done through that 78.6. We have bullish momentum, positive momentum, both on the reversal scout and our slim ribbon. Now, what does that mean? That means that what I'm looking for in terms of projection over this intermediate time frame is for it to get up in through this major 50% fib that comes off of this 196.88 all-time high here in Pepsi. And that is the retracement that we would see. So if I do this draw here, if the system can hold up right around here, you'll see there's some key levels that pop up for me. So we have a 50% fib here, which it tried to get to in this prior cycle and then was rejected. That formed that cycle peak. And I'm looking to see it get through there and then up into this projection zone number 1, which is I'm now going to use the fib extension tool, since I have 3 anchor points from our swing low, swing high analysis here. I'm using this key swing low here. Then we have our cycle peak here. And then we also have the new cycle low here. And that projection, first we have a 61.8, but I think we'll get through that based on the overall positive cycle structure, warnings that we have, the time that we have still in the intermediate cycle that we have, and get us into this projection zone number 1, which is 176.40 to about 178.40. And then if it really can clear this prior cycle peak, then I think it has enough overall positive energy to get it up near that 181, which would be near that the 61.8 of the major retracement that we had here. And then also there's a confluence with 100% fib extension from this swing low, swing high, swing low analysis that was done. So that's the overall perspective on Pepsi. Back to you, Slim.
All right, absolutely great work by the team. You got a great idea of how we approach things. Interesting, Matt, on that analysis that you showed of Pepsi, there's we've been through a period where all that money is pouring into tech and AI, and normally what happens is that when they get overvalued, the money starts to come out of those, and then it'll start looking for value. And I think you highlighted here in Pepsi that the money is already starting to do that, because it's a super bullish pattern on Pepsi for the intermediate term. And that's really about rotation or money flows changing around. That's really great. That shows the great value of the work that we do, as things just all of a sudden start to show themselves as to where the money's about to start moving to. So great work on that, and I thought great work by the whole team. So I hope everybody learned some things as you looked at that. So that's super. We're going to keep Matt here as far as taking the lead on this presentations in here. He's going to bring you into a review of services. You have to see this. This is just amazing. Our day trader is now upgraded to 2.0. Just fantastic. Matt, let's show them what we have here.
All right, great, Slim. All right, I'm going to share my screen again. Okay, as Slim mentioned, we have launched a upgrade to our day trader service, but I'm going to take a quick step back. At askSlim, as you just saw with what we did in our trade planning segment, we provide professional technical analysis, trade planning tools, and education for various trading styles. And we do have now a separate service to support day traders. So what we're focused on today in this segment is our limited time, very special offer for the day trader service, which we have recently rolled out. So that came out here on just about 10 days ago. On March 11th, we launched our 2.0 version, and we have more features and upgrades and enhancements coming to that. But this is a marvelous collection of tools and resources for the day trader. And I'm going to step through some of that here, and Slim's going to join me as well. But really what we want to make sure that as traders, so that we can trade effectively, is we have to be able to answer a few key questions. And that is, number one, it's just very similar to what we just talked about in our trade planning segment. What's that directional bias? But we also want, especially as day traders, because time is of the essence, we need to be able to distinguish between the directional bias indicators and then indicators that are designed to gauge the strength and the sustainability of a price trend or momentum trend. So that's key. And then third, what are the signals or indicators that suggest to you that a trade is a go, right? Your entries. And then what are the signals or indicators that suggest to you, or what's your process to determine your exits? So this is why we say we have that essential collection of tools and resources for the day traders, because we're bringing you the information, the indicators, the education, so that you can answer those key questions. Again, directional bias, what is that strength and sustainability of the price trend? What indicators suggest your trade is a go, or how do you know when you want to enter something? And also determining that exit. So we have an impulse monitor, which is designed to gauge that directional component and also the strength and sustainability of a price trend. So that is monitoring all throughout the session. That is an independent application that you can use with your own setup. And also, you'll see here in a second, we combine that into our day trader cockpit, but you can use this application completely separate. And again, I'm going to show that in a minute. And then we also have our 8-minute strategy grid. So Slim selected his favorite strategy grid to help with that key question around, how do I know when to enter and how do I know when to exit? Now, we're not telling you when to enter and when to exit. What we're doing is showing you our style, our tools, our strategy that we use, that we have found to be successful as a benchmark for you to work off of. And the key point here is that what we're looking for are alignments in these shorter duration timeframes. So we have a broader perspective that we use with the impulse monitor to give you a bigger picture of that dominant directional bias, plus when there are conditions that are favorable for a larger impulse to unfold. Then what we want to look at is, when do I have alignments in those shorter duration timeframes that would suggest that an entry is in alignment, that the time is now that matches up, let's say, a bullish condition in the broader degree of trend with then a smaller degree for an entry opportunity. And also this grid helps with that exit. When we have what's called a signal line, and that lets us know that likely that energy from that shorter duration time frame is ending, and that can give you a sense of a potential exit. So we have a strategy condition along with our strategy grid to give you a real inside transparent look at what we're finding when we're determining these entries, these exits, and the larger degree trends that are in place. Furthermore, this third piece here, we have a price zone roadmap where we are pre-market determining, looking at where those key price levels are, zones are on the upside, the downside. And then you can see these yellow zones. These are meant to be acceleration zones. So these are areas where we have identified likely price voids or vacuums. And when you combine that with the other indicators and you have alignments in all of them, you have very high probability opportunities for those continuations to happen and to be able to generate a profit. Because ultimately the goal is you want to be on the right side, right? So that's why we focus on directional bias, but you also want to be on that right side for a longer ride, because that's what's going to give that win-loss ratio the right numbers to make you more profitable. So now what I'm going to do is I'm going to jump over and I'm going to give you a peek here of some of these services. So I'm going to show you the day trader dashboard here. So on the day trader dashboard, we have, as I mentioned before, that impulse monitor. And I'm going to pull an example of that over here right now. So this is live right now. This is our impulse monitor. And we have two different views. So we have the impulse condition or the overall bias, which I've described. And it lets you know when that broader energetic inertia in the market is either on or off. And then also when it's neutral. So you have a very clear sense by the coloring of the outputs when something is neutral in terms of the overall condition, and then when you have a more negative condition that is occurring. And right now you can see that we have an impulse on in both the IWM and DIA, so the diamonds, and also a turbo feature that has turned on. This is a new feature. I'll describe that in just a second. And then we have a change log that is indicating when these changes occur. But we have a new view here also, we call it all. And this is going to share with you a new set of about 20 symbols that we've added. So we did a poll, a survey with our members, and they indicated to us other stocks that they day trade and that they would love to see the impulse monitor on or showing its overall condition for. And you can see the awesome variety that we've brought into this mix here. It's a fantastic, again, variety of symbols, really giving you an opportunity to find those that are in the condition that you're looking for day trading. And you have that view all throughout the market session. We have the system froze up here a second. Get back to, there we go. So we have just a simple index view. So that clean index view, and then also you can look at that all view to get all those additional symbols. So that is the impulse monitor application. I'm going to come back to the dashboard here. Give me a second to get back to my day trader dashboard. Okay, some of the other services that come with the day trader is our cockpit. And I'm going to show that here as part of the market replay system. So the askSlim cockpit, you think of a pilot, right? And it's got their cockpit that's got all the key tools that they need to fly that plane. It's the same with the cockpit that we've set up. It's got the impulse monitor. It's got our strategy condition icon. It's got our strategy condition chart grid, and also has that roadmap in it. So I'm going to pull up our replay system. Now, this is a fantastic tool that we have included in here that gives you an opportunity to essentially go back and look at the activity. It's a replay system of the live market data that we've collected based on how our system is operating. And you have a chance here to see this. I'm just pulling it over again. 1 second. So I'm going to start from the top. You can pick a day that you want to look at. Let's just look at the Fed day as an example here. And this is going to have contained within it every 5 minutes, we're taking a screenshot of that price action, okay? And you have an opportunity to see how our indicators are working as the market price action is developing. And this is the Fed day. Like right now, you can see that you had turbo turn on in the SPY. It came on in IWM. There was an overall bullish overall conditions happening. I believe this is the Fed day, right? Slim, was that the 20th we had? Yes.
Yeah.
I'm going to keep going here. And Slim, you can jump in at any
Yeah,
time once I get into here. And I'm just going to go through this, and you can sort of talk it through as you see things starting to develop.
Yeah, so what you can see is that early in the day, we had a market that was positive, and then it kind of went into the doldrums in here, but most of the stuff showing is neutral. On the impulse monitor,
one
you
little
can
dip
see
here
that.
in IWM, but it very quickly lets you know when conditions shift back.
And now here, this is key because like at this point, you can start to see that the IWM was weaker than the other indexes. QQQ and DIA were showing some strength. But again, it was just kind of choppy, moving back and forth as we get into the Fed period right over here. And you can look at the roadmap on the right, and you can see nothing is happening. We're just trading in a small range. Now, all of a sudden, the Fed news comes out and the market starts to move up. And you can see, look what happened in here. All of a sudden, it started to tell you that the conditions were right for the market to move up, and the 8-minute strategy initiated, as you can see right there. And then you can see the market started to move up through the acceleration zones very quickly. Now, if you look at the time of day that this was right over here, this was, right around the time that the Fed news came out. So if you keep advancing in here, you can see that what happened is that the market remained strong. I mean, you had a little pullback in here, but the signals were not changing in there, and it was telling you about the strength in the market. And then the strength continued. Impulse monitor telling you it's strong. The strategy staying strong right over there.
Even on that dip, Slim, you can see right in this 15-minute candle how we pulled back a good number of points in both the S&P and the NASDAQ as well as the Russell. But the impulse monitor stays on. Strategy conditions stayed positive, letting you know that overall underlying positive energy was still in the market.
Right. And one of the beauties of what the impulse monitor does, when turbo comes on, it tells you about extra energy coming into the market. Now, the way it's designed is that, you could keep the impulse monitor positive and then turbo come off and then come on again. And then it tells you about these additional surges of energy. Look what's happening there as the market is skyrocketing to the upside. And this is keeping you in your positions on the long side. I'll speak about just for a moment why this is so important. If I could just take a moment on this, the way that traders become super successful is by getting their win-loss percentage strong. In other words, you want to have more winners than you want to have losers, and you want to have your winning trades bigger than your losing trades. We always talk about the importance of getting about the winners about 1.3 times the number of the losers, and this win size about 1.3 times the size of the losing trades. So this really does a fantastic job of keeping you on the right side of the market, which is really the key. You could see in here on the roadmap on the right, I mean, it's getting into those resistance areas. It moved through those acceleration zones. This giant move that's just kept you on that long side of the market, that entire move, even in the little wiggles, it told you, nope, you still have to stay in there. So it was fantastic. Let's talk a little bit more about this, because if you're a day trader and you're struggling, a lot of the reasons day trader struggles is because they use oscillators. They think they get overbought, so they buy them when the market's weak and the market keeps going down, or they sell them when the market says it's overbought on an oscillator, but the market keeps going up. We don't use that in here. We don't use the oscillators. We use the energies of the market to help us stay on the right side. There will be days of chop when you get in and out. You don't really make any money, or you lose a little bit of money. But the other days are going to be days where you catch the big, really big trades. I talk about, and we have a lot of people that come in and kick the tires on this, and they sign up for 24.50, and then they leave in a few days because they're not giving themselves the opportunity to learn and to be able to improve their style. I say you have to make at least 50 trades in order to really see that you are adopting the best style for you, using the information in the best way. Consider this. If you take 50 trades and let's say five of them are scratches, and you have 55% winners and 33% losers, and then the rest of it is scratches, you're going to have 28 wins and 17 losses. That's where you want to get to, that kind of a percentage, 55, 56% wins, 30 to 32% losses, and then something like, 10 to 12% where you scratch. And if you do that for every 50 trades, you're probably going to yield yourself, between 10 and 13 positive units, whatever your size is. So again, we want to get you to have more winning trades than losers, bigger winning trades than losers. And you've got to work on this. And that's why we developed this replay system. So you can go back, you can look at this. Nobody has anything like this. I mean, with all of these great indicators, my favorite 8-minute conditions, impulse monitor, turbo, the roadmap, everything that you need to really get a feel. And you really know which are the stronger and which are the weaker indexes. All of this in there is just, in my opinion, phenomenal. And that's why we took money months to develop this, and believe me, tens of thousands of dollars in order to develop what I think is really the best way for you to get market feel and develop your own style, as we provide these guidelines for you. And I'm really excited about it, as you can hear.
Absolutely. And we do have a very immersive resource area that includes we've had a number of webinars that I've hosted. Slim has done a number of training videos, so we are continuously putting new content into the resource area. And so you're not just looking at this in isolation. You have a team behind you. We have our development team that is constantly bringing new features, enhancements, refactoring things, suggestions that come from our members. So it's an extraordinary product. And it is really at an extraordinary price relative to the amount of service that you get included in it. And right now you can get it, as Slim mentioned, for $24.50 for that first month. And then because we are shifting to 2.0 here, there will be a change in the price. It will be going up, but if you come in now, you will be grandfathered in at that introductory rate of $34.95. So your first month is $24.50, and then it will go to $34.95 as long as you would stay with the service.
Yeah, fantastic. I mean, that is an amazingly low price and great value for something that is just as extensive as this. You're really going to get great market feel.
All right.
So
Excellent.
$24.50. I mean, that's unbelievable. Thanks for presenting that. And any questions,
Absolutely.
they can write to team@askSlim.com, and it will get over to Matt or whoever has the right answer for you for that question. Thank you.
Very good. Thank you.
All right, we're going to move to our Q&A. We're going to turn the Q&A off right now. So all the questions that are in there are the ones we're going to take. I think that we have a good load of them here. I'm going to look at natural gas and gold and copper. And any questions on the S&P 500, basically, I'm going to, or the stock market, I'm going to answer hopefully when I do the stock market presentation. There's a question right in there from Jay. If I get level 4, would the day trader grid be included? Would allow me to put my own symbols in, if not just the indexes. I currently have level 1 along with the day trader service. Matt?
If he's asking if that roadmap grid, if you become a level 4 member and you're also a day trader member, you would get access to our new roadmap grid. You can put other symbols in there. However, it's not going to automatically generate the price zones or price levels, but you would be able to see how the indicators are working. And in my presentation yesterday, I think Jay, you were there. That grid that I was showing, which is this one here, which is our multiple time frame grid. Yes, this is the grid where you could plug in any symbol you wanted, and you could see how our weekly, daily, 2-hour, and 15-minute charts and indicators are reacting. And we do have levels and included in those in that one, in the chart streams.
Great, thanks.
Yep.
There's a question in here about the SPY and the top weighted stocks. It says, do you have any insight into research to the long-term difference between buying the SPY versus the top 5 stocks in the indexes? I don't have any research like that at all. I just want to let you know that in advance. You can, though, understand the conditions of the top weighted stocks versus the S&P 500 by using our market condition monitor. That will help you with that a lot. You'll be able to tell which are the stronger, which are the weaker ones, and how that compares to the S&P 500. So that is accurate. I should really share my screen in here as we move into this right over here, as we get into the Q&A. So let's see what else we can look at in here. I see Danny, you're in there. Hey, Danny says hi to me. Danny, I know you for decades, it seems. So yes, glad you said hello in there. And let's take a look here as we switch over to the natural gas market. Will be the first one that I look at, and it's not the one I want to look at. Let me just get this out of the way and get this out of the way, and we'll move to the natural gas market. All right, so we have been looking for natural gas to put in an important bottom in here without any real signs of that yet. You can see in here the major dominant cycles, the minor cycles in there, and this area right over here, we had synced with troughs in mid-March. And that's where we are right now, mid-March. That's the time frame we had for the bottom to form. If you look at the daily pattern right in here, you can see that that's where we're looking for the bottom to form. It looks like it's trying right in here, but you can see on here weekly, the daily momentum is negative, the slim ribbon PO negative and giving another negative signal. So we have no sign in there that the bottom is forming yet. You have in here the momentum as negative and still not turning up as you look at the reversal scout there. So this negative momentum here, negative momentum all in here, a bottom due but no upward turn yet. So if you're looking for a bottom in there, we're simply anticipating, and that's not something that we want to do. We want to let the market prove to us that it is making a bottom. So if you're planning on doing anything here because of the anticipated bottom, it should just simply be a nibble. Let's take a look at gold and copper /GC. Oops, left out the /. And here is the gold market. You can see that we keep our analysis very updated for our members. Whenever you see yellow ovals, that's what we consider to be the period of risk or corrective periods. Those align with multiple cycles in corrective periods. As we see right in here, correction, and a correction due right over here. This would indicate to me that because we've only had a couple of bars on the upside here, that the market would be resuming to the upside. Right now, it's has a pretty good pullback of about 160 points off of that panic high right over there. Let's just take a little closer look right here. And if it gets underneath that level right over there, that would be a breakdown 2147 right under there would tell me that this is really over and we're in this yellow period of risk corrective phase, where then we would likely come down into the supports. You can see the support here at about 21.25. And believe me, if it came down to 21.25, it still wouldn't be negative. It would just tell me that this corrective process was happening here. And you can see right over here out into April, out towards May, there's another rising phase. So if it came down here on the weekly, I would expect that it would be moving up again in April and May, and then have some further correction out over here late May into potentially early June. So choppy period likely ahead in the gold market based on what we're looking at in here. If it had a rally as expected again in this next couple of weeks, or let's say 1 week, then I would say that it then would likely pull back again. So that's why I say choppy period likely ahead. No runaway really expected on the upside until really you look out over here. We all along said we thought that the biggest part of the upside move would come in the second half of the year. I still, even though we've had a big upside move, I still think that's coming. And you can see we're projecting way up over here, 2,400, potentially 2,500 when you look at that. So we have this support right over here. Maybe this correction out into May comes down to that level of 21.25 and then begin to move up again. Copper market pulling back just like the other metals that we see in here. Let me just get this side by side up for you to see. This is really looking good when you look at the daily chart over here. Look at these cycles right there. And that says that this cycle coming down, that's a little shifted cycle right there. That's why it's dotted, is likely to stop going down in the next couple of days. You see supports buy zone right over here and then moving up again. So we would look for it to get back up here into the low fours, maybe up here to that resistance at 417 coming right over here. That makes this a buy area right over there. And it's not a recommendation by me. It's simply a level on the chart based on the configurations in the cycle, based on our swing high, swing low analysis. You could see the momentum in here still positive on the weekly, and over here on the slim ribbon PO positive. And once it comes up and gives you this up arrow right over there, like it did right over here, it's liable to tell you that there's an upside momentum resumption in the copper market. So that's a look at copper and at gold. The other question that I saw in there was Bitcoin. I don't see that in there anymore. I think it got removed, but I'll take a quick look at the Bitcoin market slash BTC right over here. I kind of want to look at the monthly in the Bitcoin also, because that's really important. You can see that let's just look at the side by side again, that this is labeled here as a period of risk there on the daily chart. And that are these two cycles coming down. So if I highlight this, this says that the trough is due around the early part of May in both of these cycles. So you can see right over here, this on the weekly is projected to come down into the early part of May. Now it might come down to this level or this level. What's important in Bitcoin, and we look at that, is, and I'm going to switch over to the monthly / BTC. And let's look right over here, and that is that every one of these corrections are very sizable. And you can see we've talked about it coming down 30%, 39% over here. Look at these monthly corrections, 78%, 39%, 70%, 79%. Each of those, you could see the cyclical rhythms look great. In the beginning of the show, I talked about the stock market, and that the longer a cycle rises, the more brief period ahead there is for correction. So this says, well, we already got not down 19% right over there. Maybe it gets down to about 51.50 right over here, 30%. That would be the best any of these cycles have done, and then move up again and see what it can do above that level, above the 70,000 again. So 51.50 up to 70,000, 51,500. then up to about 70,000. Looking at the monthly chart makes a lot of sense to me. When I look at the daily chart, well, it says that likely to keep coming down in here. The bottom of that support is 52,700 right over there. And here again is that monthly support there, 5150. The bottom of this weekly support is 52.3. So let's just say it makes sense that it's going to get down close to 30% down into that period in May. I put up a tweet that said, a stock that said Bitcoin likely to test 52,500 by May. This is why. It's all showing up to me right here, and very likely that rallies over these next couple of weeks or upticks that we see in the Bitcoin market are likely to fail. So that's a look, I think, at everything I'm going to look at. And then I'm going to turn this over to Arvi. Arvi, you want to take over?
Sure, Slim. So I saw a couple of questions on both SCCO and FCX, and then we'll look at the SMH. I don't have snow, just as a heads up, but let's go ahead and first look at SCCO. Okay, so you should see the weekly and daily cycle analysis for SCCO. And what we see here is obviously super strong. You're pinned near highs. Now, what I like about this is a very rounded look here, and then it broke out of its base. Okay, so long term, we're talking monthly time frame here. This is extremely bullish. And that's important because you always need to look at not just where are we right here, you need to look at where have we come from. In this case, we're coming out of a really strong base, and these are moves that can last for months and can lead to meaningfully higher prices. And that's really what we're seeing here as being the highest odds in Southern Copper. Right now, there's a low that is due here, 415 to right around 617. We would be watching for a higher low flag to form, then that would likely set up that next move higher. Obviously, it has run quite a ways at this point. If we shift over to the daily chart, this is a 30 bar, this is a 27 bar cycle bracket in SCCO. Overall, quite clear. There's a low that is due 328 to 410. There is a fib just above us at 106.25. It is likely to test that level, then watch for a dip, then see another move up, then watch for that to fail, then roll back down into that next daily cycle timing window, which is due right around mid-May. Shift back to the weekly. That would be inside of when the weekly low is also due. Okay, so that's what we would be seeing as the highest odds. If we shift over to FCX, overall similar, although not quite as nice here on the weekly. We have been, however, trading in a sideways range for months. If we can work our way out of that range, which has a range high of right around 46.25, then these old highs would be in play at right around 52, going out into the summer. So still a bullish overall picture here in Freeport. There's a low that is due 4.8 to right around 520. Same overall picture, watching for flags to form and then for this to work its way higher. And you can see that there is also a daily low due 321 to right around 4.4. And we are watching for small flags to form and then another test back up. That next daily low is due right around mid-May as well, in line with that weekly low here in Freeport. So all this is really lining up quite nicely. We now jump over to NVDA, and then we will look at the SMH. Obviously, just a monster run here. There is a low that is due 4.1 to 5.6. No obvious low yet here. There is a fib at 834.65, but it has not obviously formed any kind of clear high yet. The highest odds would be, however, we would see a dip and then another move back to the upside, as this huge move is not likely done yet. If we shift over here, you'll see that there's a daily low that was due here. This one formed right on time, 315 to 326. A nice flag that formed. Very good odds of a move now through the old high at 974. And then we have a zone here from 999 to right around 1037 here in NVDA. If we shift over to the SMH, just overlay the drawings here. And what you're seeing here on the weekly is that there's a low also due for 1, 2, right around 5, 6. Same core picture. A fib right here at 215.5 or so. We would look for a pullback, then another move back to swing highs or higher is really the highest odds in the SMH. Still bullish action going on here. Yes, a large run, but not seeing any reason to be bearish yet in the SMH on the weekly time frame. If we go ahead and shift over here, daily low that formed, then we turn back up. We are looking for a move back through the 78.6 at 233.25. The old swing high here is at 239.14. That's reasonable over the next, I would say, week or so here. And then we'll be watching to see if it can form its daily high, then start to roll back down. But right now, the core bias is still positive as well in the SMH on the weekly and daily time frame. And I think we hit all of those stocks. And Slim, I'll hand this off to you once more.
Yep, you got all the stocks we had on there. Great work. Thank you.
Thank you.
I have a couple more questions that I'm going to answer just very quickly in here before I switch over to the stock market analysis. We have a question from Roger. Do I still expect the Russell to lead the way in the market after a correction? In other words, the small cap stocks to be stronger than the rest of the market. And I'm going to show you the analysis on that in a moment. And the answer to that basically is yes. A determining factor will be about what interest rates are doing, because they tend to do better when interest rates are weaker because those companies borrow a lot of money. So the answer is yes, I expect a rotation, but take a look at those charts and we'll take a look at what that looks like. Last question I'm going to take is from Danny. And he says, I got shaken out of my longs on that whiplash on Fed Day, but I did re-enter a bit later when the signal screamed long, and I held overnight before hedging. My question is how to avoid that happening in the future so I can hold through shakeouts. That's just a fantastic question. When I hear a question like this, it says to me two things. Number one, on event days, you're trading probably a size that is bigger than makes sense because anything can happen on a Fed day. We don't really know. So on those kind of days, I like to be either out of the market or trade really small. And then not be in a condition where if I'm wrong, it can really set me off. The other side of that is the coach in me wants to answer about the trader psychology of it, the emotional side of that. And that is anytime you're in a position that market movement can easily shake you out, it says to me that you're trading a size that can easily trigger of the fear mechanism. So in other words, your trading then switches from intellectual to emotional. And once you're trading emotionally, you're going to end up then letting the wiggles in the market determine your actions versus that which you believed based on the indicators or your own analysis. Also, you mentioned that you when the signals turned positive, you re-entered again. That kind of said to me that you're looking at intraday, maybe you're looking at the day trader signals. And then you said, well, I held the positions overnight, of which the day trader signals are only meant to be for that day. That's why it goes gray 5 minutes before the market closes, because we don't want to give you any information. We want to signal to you that the signals are gone and we're going to start over on the next day. So you carried positions overnight, which says to me that you have a longer term swing trade perspective or you broke some rules. So there's a lot of things in there for you to look at, Danny. And it says to me that you really need to look at, am I a day trader, a short-term trader, or am I a swing trader where I'm going to carry overnight? And if that's the case, if you're a swing trader where you're going to carry overnight, you want to do your work where it's giving you projections for a number of days out, not just at that time. If you want to make sure that you're trading only on an intraday basis and using the day trader information, then do that. And then at the end of the day, get out no matter what. Have a clean slate. Like I said, how did you do your last 50 trades? Did you have 53, 55% winners? Are your winners like 1.3% bigger than your losers? Are you net making money? Then you know you're developing your plan correctly and you're on course. So look at those things. How are emotions coming in? Are you really trading the method that you want to be? If you're not, if you're looking at indicators that are not a match for your trading style, in other words, the length of the indicators, intraday versus swing trade, then that mismatch is going to throw you off balance. If you're trading too big, then the emotions are going to come in. That's going to throw you off balance. You have to find, it's like a golf swing, which I hate to say, but it's like getting all of that in line so that you can really continue to do well on average. Keep track of your last 50 trades. And if you're not, coming out at 53 or 55% winners at least, 1.3% size of your win to your loss, you know that you need to make some adjustments in there. So hope that was valuable to you. And that is the Q&A for today for askSlim Live. Stock market analysis and projections. Important information. Make sure that you read this slide. This is all about our analytical style and about you using the analysis that we provide and the importance of trade ownership, making a trade your own so that you don't wait for anything else or anybody else to help you with the management of that trade. All right, stock market analysis. We're going to look at a review of corrective formations. Then we're going to look at the level 4 chart grid. We're going to look at 12 charts there and go through it pretty quickly, but this is going to be a long segment. Plus, we're going to look at the VIX, and it says that trouble is near, and I'll show you why that's the case. So let's switch over first and look at this chart. This is a weekly chart with cycle brackets on the bottom. And this helps you see the ebb and flow, the money coming into the market, the money coming out of the market. And what's important to note is that the longer a market rises, the more brief period of time there is for it to correct. And when you get a market that rises a very long period of time, then you only have a number of weeks for it to have a correction. If I go back to this period way back over here, looking back here in 2020, 2021, after the pandemic, you can see that these long periods of advance only brought minor declines or minor pullbacks. This was about a month. This was a couple of weeks. This was about a month in these strong upward trends. This was 10.5%, 5.7%, 5.8% declines. These are very modest corrections. To me, anytime you're in a declining phase that completes, you've had a correction of the cycle and then moving up. You can see in here as the reversal scout gets a little bit to the downside in here, but not much because there wasn't much time. This one was so strong it never turned down for a brief period of time right over here. But you could see this where it peaked right over here near the midpoint of the cycle. It had a lot more time to decline, 14.6% right over there. And when you had a breakdown of this cycle, then you had a couple of waves on the downside. This last one over here, which lasted 2 months, was 19.2%. So you could see the importance is where does the cycle make its peak? These are called the translations. And when they make their troughs or their lows above where the previous one was, those are positive translations and positive configurations. You can see in here that in the bull market that began over here in October, and that low came right on time for us right there, that it created a positive cycle. It had a correction of 9.2% over 6 weeks. This was a longer correction. You can see where the reversal scout turned over, and this one over here was about 3 months total in there. It fell 10.9%. Look at this one. Reversal scout turns up here. It tells us about the bottom right there and has been positive during this whole period. We have said, no matter how many times we've said a correction is going to come, we've said the market remains bullish, and that's been the case. So that's where we are right now. And you can see every single one of these cycles has a corrective phase. Everyone, when I go way, way back over here, you can see they all have corrective phases. There is none that doesn't, and that's how each of the cycle periods end. So there is one likely coming right over here. What's it going to be? Well, it could be as little as 5.5%, 6%. It could be as much as maybe 10 to 12% based on the limited time period that we have right over here. So it's important to understand this. The last part of this is notice the 13-week simple moving average. Every single one of the cycles, every single one going back years and years, when it comes down, it tests or breaks the 13-week moving average. That you can see is right over here, coming up here, and the minimum downside would take it down to 5,000. Big deal. I mean, that's about a 5% downside move. It doesn't speak to very much of a decline, but it does speak to the minimum amount of decline that we're likely to have right over there. Now I'm showing you this a little bit differently. Let's look at the bull market right over here and that same time frame that we have right, where does that go? Right there. Just get all of this in there right there. And that is right over here from the bottom of that correction. And you can see on the daily chart over here that whenever the momentum conditions were positive, this is the slim ribbon on an area chart. Whenever this was positive here and this was positive here, the market was in positive condition. When you got into this corrective period over here, well, then that's this right over here, and you get red. You get continued downside moves. This hasn't turned red yet. Let's just look at this last cycle right over here and right over here. This is why we keep telling you that the market has been bullish. The slim ribbon PO on the bottom, all of those resumption signals right there. We're not in the correction until this daily chart starts to tell you that it's rolling over and you start at least to go purple. So you know that the momentum has changed. That has not changed. So what does this tell me? This tells me that the corrective period that we're looking for hasn't started yet. And when it comes, it's likely to be about a month long or a little bit longer, because that's all the time that's available in here. We talked about April and into May as the time frame where there's likely going to be a correction. The middle point of this, or the ideal trough, is about the first or second week of May. That's what we think we're going to do is have a corrective period here that takes you down into that time frame. Now I'm going to look at a lot more charts in here, but I wanted you to see those corrective periods. This is the level 4 grid right over here with the S&P 500, NASDAQ, and Russell. Let's look at them one at a time, and you can see this is what I just showed you. So this is the 23.6% right over there. That would be a 5.3% correction down to about 49.80 right over there. That's minuscule. But you can see that there's not a lot of time for the decline. So that means when this tops, this period of March through May, somewhere in there, we're going to see a decline. If it got down to the monthly 23.6% right over there, which is just above the 38.2 on the weekly, that would get you then closer to 4,800 and more like a 7.5 to 8% correction on the downside in there. That to me seems very reasonable that we get into that period for the correction. People are saying market's never going down. It's only going up. And I've been around here 50 years. I have seen these markets time and again. They eventually have corrections. And now what we're seeing is the market's likely to have a correction and then move up into the fall, even to higher levels out over there. Our year-end cycle analysis showed the market at best getting up to 5,100 for the year. Well, obviously it did much better, and AI has been responsible for that. That doesn't change the patterns of down into the spring and then up here into the summer and fall. That's what we believed then in January, and that's what we believe now. It's just that the levels have moved up because the market has told us to do so. Here's the daily chart on the S&P 500, and you can see here on the bottom is the option bias study. This has been just almost perfectly giving you positive signals. And here it says stay on the long side in the stock market. You got little top warnings in here that occurred, and you got little corrections. But overall, the option bias study has told you so. This top of this upper channel, or the slim cloud as we call it, takes you up over 5,300. So that is a possibility, but we're already at 250, 240. So that's not a very big deal. And then this period right over here takes you out into May. That aligns with what we're talking about on the weekly. So it would be a cycle in here. If it holds above that level, 5104, then you know that we're still in rising phases. And if it breaks below there, you'll start to see momentum deteriorate. Here's the momentum in here, and you can see solidly positive. We said nothing bearish about this market other than corrections are likely to come. I showed you why. Now you can see not time yet until the market tells you. This has been on the daily chart, positive momentum. And here you could see on the 2-hour chart, the askSlim market condition indicator up here at 100. This is not overbought. This is a market condition. And it tells you that the weekly and the monthly is still putting strong upward force on the market. It won't let it come down. When it get down under the 25 is when I start to say we're testing that strength under the minus 25, and then you know something really has changed. So positive momentum here on the 2-hour, and that remains. Take a look here at the NASDAQ right over here, and you could see the same story. We're looking for it to peak in here and then come down into May. It's reasonable for it to come down to about 16,000. 800 right over there. Here's the intermediate 23%. That would be crazy bullish if it only got down to 17,570. But those are the levels we expect this correction to come down to in here. Let's advance here on the daily. You could see the cycle rhythms in here, and this top of this upper channel taking you to 18,630. Approximately up over there. When this bottomed in here, it told us that we were beginning to move up, that this cycle had bottomed. You could see the option bias study telling you keep your option positions biased to the long side. That's why this was created, so you don't get in trouble and run over by the momentum in the market. Here you see the daily momentum conditions, pretty similar to what we see in the S&P 500. And you can see in here that the askSlim market condition indicator had a little dip, but didn't get to the 25, and now is moving back up over here as you continue with positive conditions here in the 2-hour chart. Also, that's a look at the NASDAQ, and now let's take a look at the Russell. We just had a question on the Russell. Now you'll notice some extra lines in here. The reason for that, and I'm just going to go over here to the daily chart over here, and that is that there is a trough due over here that is in April. And then if I look at this bigger one right over here, that's due in June. So this is due sometime around the second week of April or June. When I go back here to the weekly chart, I have both of those scenarios in here. So we have a little bit out of sync with the rest of the market. But then when this correction is over with, you can see the support buy zones. This is very likely to take off in here and get up to, well, maybe well beyond 2,200 in there. This is the major 61.8% here, and that's very likely to be taken out at 2,140. I don't have the higher ones in there right now. We'll be putting those in there once that low is established, but you can see in here we're looking for a decline in here with the period of risk potentially going out into June. If it's out into May for the S&P 500 and the NASDAQ, then this could very well be out into June over here for the Russell. Still, when this correction is over with, this takes you out into the fall for the next rally. So we'll be looking for much higher prices in the Russell. So positive momentum reestablished over here as you got this minor correction, and you have momentum in here, but you have this candlestick pattern there, this evening star, giving me a little warning that this maybe is an area that it is about to peak. We'll see if you can get up over here. Again, if it breaks under 2039, 2040, that would be a breakdown and tell us that the intermediate pattern has peaked. I think I missed that on the NASDAQ, telling you what that level was here in the NASDAQ. I want to speak to that. 17,765. If it breaks below that one, that would be where you're in a negative condition also and in a correction. So the Russell under, let's say 2040, and that gives you the indication that the intermediate peak is in place. and we are going into the correction. In the meantime, you could see positive cycle brings you up to that next high level right over there. And you can see in here on the market condition, on the OBI, telling you over here, and just take a look right here, telling you over here where it was starting to give you some negative warnings. But then right over here where it turned positive again, it said, okay, it's time to keep yourself biased on the long side. And that has been accurate. Here you could see it's been kind of choppier here for the Russell in recent days as it went to neutral, but then turned positive again on the daily momentum. And you can see here's the example of it being super positive on the market condition indicator, getting down, testing the 25, and then rolling back up and turning positive again. This tells you that the intermediate and longer term energetic forces prevented it from turning negative and turns positive again. That overall is a bullish indicator for the Russell. Again, this is our look at what the level 4 grid looks like, and that's what I just worked off of. So if you want to become a level 4 member, you get this to put up on your Thinkorswim site, and you can refer to this, and we update this on a regular basis. I want to talk about the VIX right now because it's so important to this analysis. This is the VIX weekly on the left. This is the VIX daily on the right. We have talked about this 29-week cycle right over here, bottoming sometime right over where we are now time-wise, and then getting upward spike here in the VIX. In other words, the decline in the market. This takes you out into that May time period right over there. So right now, you could see on the daily chart, this is getting ready to bottom. So you have a bottom getting ready to form here on the daily. You have a bottom getting ready to form here on the weekly. And let's just switch over here very quickly to a look at the monthly chart on the VIX, because this is so important right here. And you could see that we are at a very important level on the monthly where the VIX is likely bottoming. And when you get to a time frame where the VIX is bottoming on the monthly, and these are just fantastic bottoms right there, you get huge upward spikes in here where you can get up to the 40, 50 level in the price of, especially the price of puts, with the big demand for puts or for protection. We are getting into that right now. So the monthly bottoming, as you see right over there, the weekly bottoming, as you see right over here, and the daily bottoming, as you see right over here, what does that tell you? Sometime in the next number of days, maybe a couple weeks, the VIX is going to bottom and very likely going to have a large upward spike. If that's the case, then the S&P 500 or the indexes are very likely to go into this corrective period that we're talking about here on the weekly on the left, on the daily on the right. And that is why we look at some of the evidence analysis that gives us a great sense for the overall conditions of the market. So I showed you the corrective formations, why it's so likely that there's going to be a pullback in the next month or two. Looked at the S&P 500, showed you all of those conditions. They're all still positive. That correction that we talk about, that is basically 100% sure to come because every one of the cycles has had it for decades. Well, that may be very deep. It may be shallow. The odds are now it's going to be shallow. Plus, the VIX analysis says that trouble is near. I showed all of that to you right here on March 22nd. Wow, team, we just looked at so much. I want to remind you that our day trader special is going on right now. This is our day trader service 2.0. We did a great presentation on this earlier on the show. I want you to go to the top of the askSlim website, click learn more, and you can sign up for that for only $24.50. Don't be a tire kicker. Don't come in there and look at it, spend a couple days, say it's not for me, and then go away. What I want you to do is get 50 trades in and learn how you can use this and how you can use our replay system to help develop your own trading style. This is beyond belief, and I want you to go and spend the time it takes to really learn this. That is everything for today. Team, how did we do?
Oh, unbelievable. So comprehensive.
That was great, Slim. Excellent.
All right. Yeah.
Really, really good.
Yeah, that's it. Okay, you want to learn about us? Go to askSlim.com, learn from this team of pros, and you can just look around and learn our style of education and analysis for traders and investors. That'll wrap us up for the day. Thank you all that stuck it out to the end. I hope it was great information, and thank you, team.
All right. Take care, everybody.
Thank you. Bye-bye, everybody.